Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, March the 20th. So today we wake up and we have bright green futures, and what woke me up this morning was one of our dear fellow members, Pat, sent me over a text. Gold up 40. I had my phone on my chest because I kept checking quotes in the middle of the night. And it was a great way to get woken up. So thank you, Pat. Um, so we're looking at current at the Nasdaq. The Nasdaq current is up roughly, uh, let's just say just shy of 5%, 4.89%. Good morning. And it looks as though we can move higher here. And last night on Thursday Night Stock Charts Live, hey Pat, last night on Thursday Night Stock Charts Live, I mentioned that I expected a rally. Did I have a concern about the possibility of us uh, putting in one more leg up higher on the VIX, meaning another downward move on the market? I expressed that when I was looking at the 2-hour chart of I believe it was the Dow or the S&P 500, one of the two. And looking at the VIX, I was concerned about a bear flag setup. The the major crux of as to why we're seeing a rally this morning was the US dollar, which is de facto another VIX because it's where the globe is going in terms of a store of value. And the Federal Reserve has been doing nothing lately other than printing new dollars, meaning digits on a screen. And, excuse me, and you could see that overnight. Let's go to a 4-hour chart. We broke support. Now, we are consolidating here. Now, hopefully this breaks. So watch for consolidation here, and we may see another attempt at a rally here because there is a dollar shortage. But I have little doubt that the Federal Reserve and Treasury are doing all that they can to dilute the dollar. I think the Aussie dollar declined the other day 6% in one day. Let me just look at some quotes here, comments, I should say. Mullah in VXX calls, thinking about buying SPY calls intraday. Be careful there about. I'm gonna talk about that. Be careful doing that. I'm down like 50% on VXX. So the VXX, that's long volatility, and you're holding calls on volatility, and you're down 50%. Must have bought right up at the highs. Is that accurate? I don't know if I'm gonna be able to pull it up here. All right. Sorry to hear that. It's not going to come up here. Um, yeah, I don't envy your position. Um, I don't envy it. It means that you have futures, you have stocks, you have equity futures, all or options, all expiring at the same time. Don't ask me the mechanics of it. They're all expiring at the same time. I'm not a futures trader. I just study them on the charts. All right, let's. Good morning, Sam. Yeah, so be careful chasing this market. You know, if you have a loss on something, sometimes it's best not to chase a market and then open up another position that may not work for you. This is a market that's notorious for pulling the rug out from under you when you get a morning rally. So I would be very, very careful about chasing this market higher here. You know, the time to have been buying was last week at the depths of the doom and gloom. So I'm very reluctant to say, okay, start buying this rally. Good morning, Cap. Good morning, RL. Cat, this is a one-day thing or up for a bit. If we close up today, this will be the first back-to-back up day on the S&P 500 and the Dow since late February. So we may be able to put together a continuation move higher here. The question is, uh, where do we peak out? Do I think that we're going screaming back to all-time highs? No way. We're pulling back. We're going to do a retest. We went over this last night on Thursday Night Stock Charts Live in great detail. There's no way that we are going back to all-time highs without a pullback and a retest of recent lows. So I think that what we need to keep an eye on is the U.S. dollar. The dollar's been keeping a lid on a lot of assets, particularly gold and silver. And now they're getting a reprieve this morning. So again, the dollar broke support, this lower band of support. Now we're trying to build a base here at the 101.35 mark. Ideally, it breaks. If it breaks, we'll see a continuation move higher in the rest of the market. Taking a look, let's go to light sweet crude. Yesterday was the biggest one-day gain in crude oil prices in history. So we hit a low of $20.52 the barrel. We are now up to $27.90. Have no doubt that the junk bond market is, those who are junk bond traders are dancing the Irish jig right now because that's a reprieve for them. HYG, not much in terms of a move here, but at least we stopped going down. These are the junk bond ETFs. And taking a look at the XLE this morning, it's spiking up higher in the pre-market. We closed out the day yesterday at $25.47. Last tick was $27 per share. So a big move higher here this morning for energy. Now, we have been building positions in silver and in the gold miners. Let's take a look at gold this morning. Gold is up about 2.33% on the morning, and it looks as though we're going to press up higher here. We've seen a nice consolidation on gold, and we've also been big buyers of silver. And last look, silver was up at around 7% on the morning. We pulled back a little bit, but a nice move up higher here on silver. So the metals are working well, and the rationale, the logic that we've been using is that we believe that while we're seeing short-term deflation, longer term, with the lack of production, meaning people sitting at home not producing goods, and while the federal government floods the markets with dollars, there's going to be a lot of money out there to spend with too few goods to go buying. So that's going to cause inflation. So this is the reason why we are looking to build our positions in the precious metal names. And we did do some buying of the utilities, but oddly enough, the utilities, they're down this morning in a very big way. So to say that I'm surprised is an understatement here about the utilities. Last tick was yesterday. I don't know, maybe these aren't trading yet. I don't have a utility index to track here. If anybody out there could riddle me why the utilities are this weak, I'd love to hear it. I mean, they're at historic lows, yielding a big fat yield, and they're not trading well. All right, let's take a look at I think I went over the NASDAQ, but let's go over it again anyway. We're up nearly 5%. Yes, I already did this. We could hit around 7,800 before we hit real serious resistance on the NASDAQ. Pat, would you buy silver at 12 SLV? Let's go to the, I'll go to the static charts, Pat, and we'll take a look at where we have resistance levels. The last thing I want to do is buy it into resistance. I don't think you can get hurt here longer term buying silver, but on a short term basis, we're probably going to go into the day a little bit overbought, and we may get a better price on a pullback. I guess utilities are down because Trump said you can be forgiven if you don't pay the bills. Peter Schiff said so. Somebody's going to have to bail out the utilities. Boeing at 109. Nikki Haley resigned. She was the former governor of, I believe, North Carolina. She resigned from their board overnight. She said they were being unreasonable with their negotiations, what they were looking for. Hey, Trent, good morning. I was looking at the long-term historic chart on S&P, and it looks like 1,500 is within the long-term trend channel. Longer term, it's possible. I wouldn't argue with that. Yeah, just to be clear, folks, while I have a bullish tone to my voice this morning, longer term, I'm not a believer in after we have a crash, and we have seen a crash here. I'm not a believer in V-shaped recoveries. So we will get a pullback. Perhaps it'll be a higher low, and we'll move on to new higher highs. But we will get a pullback. Taking a look at Bitcoin. Bitcoin continues to scream higher. Bitcoin, we know from a past analysis, does well during times of inflationary concerns. And Bitcoin is somewhat validating our inflationary call. So nice breakout here on Bitcoin. And it looks as though we're probably going to press up higher. Let's see, what else? What else do we need to go over here? Let's go to the S&Ps and the small caps. All right, so we have the S&P futures up 4% on the dot. A beautiful breakout of a wedge formation overnight. There's more fuel in the tank here. And I mentioned this last night on Thursday Night Stock Charts Live. If you're not a subscriber to my YouTube channel, you may want to click that subscribe button if you could. And hit the like button. That would help me out a lot, please. I mentioned last night on Thursday Night Stock Charts Live that when you get a bear market rally, I've lived through, this is my third bubble, and I don't know how many corrections. You get rip your face off rallies because the shorts become extremely complacent. They believe that they are the new gatekeepers of the world to the stock market, and they get very, very complacent, and they do not cover their positions until it's too late. And then the computers rip their face off. So what you're seeing right now is a setup here on this 4-hour chart for the potential for a rally all the way up to 2,700. It'll feel like a new bull market, but be very, very careful because in all probability, we're going to stall out, peter out, and roll back over, and you're going to see the shorts reload on this market. And do we take out recent lows? I don't know. I'm not that smart, but there's a very good chance that we do, given the great unknowns that are out there. Checking out the small caps. They're up about 4 1/3% on the morning. Very similar. You're seeing a wedge formation, a breakout, and I would expect to see a move higher. Would I go chasing this market? No. I need to see how we close out the day. Do we need to, I don't want to be the guy that comes on and says, that throws water on a rally. But it's my job to be frank and to just speak my mind and to use my experience from past bubbles. And what we've seen in past bubbles is, unfortunately, our mornings like this where we've opened up with huge bright green futures only to see the markets fade. So while I'm optimistic this morning, I worry about those that are going to go chasing this market in the morning only to see the gains that we're seeing at current begin to fade away, and all of a sudden, if you took a loss back here and now you're buying back in because you have FOMO, what are you doing on a fade? You're losing money yet again. You're back in that cycle. So if you lost a lot of money, you're better off not chasing the market. Allow for the rally on a daily basis. Allow for the pullback. Look for that higher low. Then put money back to work as you begin to leg back in and buy on strength. Buy on a validation that we've seen a bottom. If you're a trader, different story. Just use a tight trailing stop loss order. Remember, these computers know exactly what the emotions are of people, and they feed off of it. Looking at the 10-year note, nice breakout. I would like to see a close above 152 on the 10-year. And that would be nice. Seeing a breakout, a retest, and then a continuation move higher. That means you have money rotating into the bond market, keeping yields lower, and that should help the utilities. But the utilities are not moving. Shocking. All right. What else do we have here? Nat gas. I'm really watching Nat gas quite a bit. Nat gas during the heat of the sell-off in the crush, the selling panic. It was up on the month, and I was very impressed by that. We had given up those gains, but it's going to be interesting to see how we close out the month of March in Nat gas, because I'm getting the feeling that we may be seeing the beginning of a bottom in nat gas prices. Let's clean this all up. So what I'll be looking for, this is a weekly chart. I'll set up my tripwire. Not that I'll trade off of this, but this just gives me an indication that the probability of us breaking out above weekly resistance in green is growing. Now, if we fail to hold this support level, well then my theory is not sound, and we're moving down to new lower lows on nat gas. So this is what we're watching. Ideally, we close up on the week and on the month. When we get a breakout, there's that tripwire up front. So we still need to see a big move up higher in nat gas for that to trigger, but it's certainly possible. Let me go to comments. Recommend we move all the SPY calls. That no, I don't want to chase the market, especially with options. Italy is blocked for another month. Guess Spain, France, Germany will follow. What you mean blocked by inability to sell short? Oh, so you. So you're asking to buy SPY calls as a day trade? Not too much risk. I mean, take a look at what's going on here. What your bet is, and I'll put it to you this way: markets don't crash up in general, right? They'll crash down, but they don't crash up. So what you're saying is that, okay, do I condone buying the S&P 500 as a day trade as they're already up over 4.25%? I couldn't in good conscience do that. Might we see higher highs here? Sure. If you're going to use a stop loss order, okay, but it's too much risk and not enough reward for me. I would wait to get bearish on the S&P 500 until we begin to see resistance at selling pressure at a resistance level, and we'll be looking at that over the weekend. I'm going to be looking to short the market. So as we're talking bullish this morning, have no doubt that as we rally up higher here, we're going to be looking to reload up on shorts. We went into the sell-off short of China, short of Amazon, and we will be looking to reshort this market yet again. And am I predicting a break to new all-time lows? Not necessarily, but at least at a bare minimum, I'm expecting a pullback and a retest of recent lows at some point in time in the future. That does not mean that we cannot have a multi-day to a multi-week rally before we do that. So make sure you subscribe to the channel, and if you're not a member, think about joining up. and we'll track it together. I want to talk about. Oh, I need to go over for Terrence. I forgot to go over one of his symbols last night. Terrence is one of our members, and he was looking at Lululemon. First, let's see how it's trading in the pre-market. I have to imagine with the gyms closed that Lululemon's going to be under a lot of pressure, and they are. But this is a great company. You can't help but think that this is one that's going to bounce back. So we're down a little bit this morning. This probably didn't even trade yet. Yeah, there's no trades yet. We'll probably pop up this morning. So let's go to the static chart of Lululemon. You can see I was looking at options last night. Let's go to LULU. Terrence sent me an email last night. You forgot me. Sorry, Terrence. Terrence has been with me. I don't know if you're out there, Terrence. How long have you been with me? Since 2012? As a member? Long, long time. All right. Let's begin with a monthly chart, Lululemon. And then we're going to talk about our NUGT trade. Pat was asking, fellow member Pat was asking where I see support and resistance on NUGT. NUGT is the leveraged ETF putting you long of the gold miners. And you could see here that, as with most stocks, we have broken monthly support on Lululemon. We've had a nice bounce, and we are flirting with holding. Where did we close out yesterday? Right at support. 154.86. And we have support at 154.80. So right there. So nice sell-off for those who bought down here at the lows. Congratulations. Let's go to a weekly chart. Wrong chart. Sorry. Nice rally off the lows of the week. Where we saw the highs of the week is a resistance mark at 162.81. A close above that level may have me buying. No. I retract that. I think what we need to see is more consolidation on Lulu. I mean, this is way too tight. We'll probably break out here, pull back and do a retest. I think we could probably get this at 157, 155 per share. If we spike up higher today, I would not chase it. We closed out right where I would want to purchase these shares. And keep in mind, yeah, the 50-day, it's going to be crossing down below the 200-day moving average. I don't see any reason to go chasing these shares at current. They'll probably spike up today. But you could see yesterday, this wick or topping tail, you had some selling pressure in the back half of the day. But you saw that with most of the market. Let's bring up our friends over at TrendSpider. Yeah, you have a lot of, this is a 4-hour chart. You have a lot of resistance above here. In solid line are daily resistance levels. In dashed line are monthly resistance levels. There's resistance at 162. Actually, I said that these were monthly resistance levels. They're actually weekly resistance. My apologies. Yeah, you could see how he rallied yesterday. That 162 mark is acting as resistance. And then they may pop it up higher above this mark. And if we begin to trade within this wedge formation, if in fact we do pop up higher and close above 162, I would allow it to consolidate within this wedge formation. And then as we poke our head up above this upper band of resistance, then I would look to open up a position. If you're dead set on opening up a position today, I would use a stop right down below 162. Unless, of course, you're looking at it as a long-term investment. But if you're looking at it as a trade, and that's how I'm looking at everything right now. I don't think most stocks or industries could be considered investments at this point. I think we're going to rally. We'll pull back. If we hold, then we'll see whether or not they become investments. But we're not there yet. Far too much technical damage has been done. And far too many unknowns out there. So that's my thought on Lululemon. I'm optimistic, but cautiously optimistic. Let's see. SPY bearish next week with all the bad news. I don't know about next week bearish. At some point in time in the future, we will get bearish on the S&P 500 again. Sam, the limit was 3.3 2020. Now population is locked down. All right. So you're talking about Sam. Our friend Sam here is over in Italy where they're getting hit very, very hard. And our prayers to our friends over in Italy. And I have family over in Italy as well. Great people. Absolutely great people. Cat, very hard to know if one should sell this rally or buy. You know, it is very hard, Cat, and that's the value of charts. You know, if you know, as we proceed into the new trading day, you know, we're looking at resistance levels on as to where we may want to sell and perhaps look to get back in. I mean, taking a look at the 4-hour chart of NUGT, what just happened here? Sorry about that, folks. Only when I'm live does this happen. Okay, so looking at a chart of NUGT, we're looking at resistance levels initially at 1112, then at 1213, and that should coincide at or about this upper band of resistance, which is declining. Now, going into next week, I think what we're going to be doing here on our NUGT position is selling covered calls going out and into next week. Because what happens, I'm going to illustrate what you're going to see, and you could use this analogy across the board for pretty much any stock, any index, whatever. I don't care if you're trading cupcakes. Use this trade theory, if you want to call it. So what you're seeing are your moving averages decline. What they're going to do, because you're seeing this across the board, moving averages in decline. And what they do is they act as a declining ceiling. So to think that with a steep decline right here in green is your 20-period moving average, to think that we're just going to go shooting up and through it is kind of silly. It's not going to happen. We may flirt with it, but we're not going to succeed. We're going to get a pullback, and we're going to flatten out. The shares will consolidate. Then they'll make another run, and in all probability, then they will succeed in moving past that declining 20-period moving average. So this is what I'm looking at as we move into next week as being our resistance level, and in all probability, it will coincide with one of these resistance levels. We will then look to sell just out of the money covered calls to generate cash flow. And I'll illustrate for you how this came into play this past week. I'll use a 2-hour chart on NUGT. Take a look at what happened. We woke up on Monday morning. On a weekly basis, we were trading down below the third standard deviation Bollinger Band on a weekly basis, unsustainable. We got a rally. We went all the way up to $14.22. Here was your declining 20-period moving average on a 2-hour basis. What happened? Stalled out, and then we rolled right back over. Now this 20-period moving average is going to begin to flatten out. We will rally. We'll eventually trade on top of it, setting the stage for another move higher. I'm expecting to see the same thing with the 4-hour chart using that 20-period moving average. Use whatever index you want to trade. Short term, if you look at the sell covered calls, wait for that rally up and into the declining 20-period moving average, and then sell covered calls into that resistance level. Let's see. Last 3 Fridays, big up, and Monday's hardest sell-off. Just this time, we have back-to-back. But last 3 Mondays, bigger down. Could be. Got to keep an open mind. And that's why it may be a good idea as you proceed into next week, sell some covered calls or lighten up as we near a resistance level. You'll get an opportunity to re-enter perhaps at lower prices, even if it's an intraday pullback and we begin to rally back. At least you go into the weekend with the presence of mind that you either sold covered calls at a reasonable resistance level. Even if you don't do an at-the-money covered call, do an out-of-the-money covered call. Generate some cash flow. Have some peace of mind. Or lighten up a little bit on today's profits, re-enter on a pullback at some point in time in the future. Okay. So, Pat, that's the game plan as you proceed into the weekend with the NUGT trade. And we did more buying throughout the week last week, or this week, I should say. My mind's already into the weekend and next week. I want to talk about the silver-gold ratio. I've brought up this chart several times this past week to illustrate a point that there is an opportunity of a lifetime. And I'm probably going to replay this chart at some point in time in the future. Here's an all-time view of the gold-silver ratio. And this measures the number of ounces of silver it takes to buy 1 ounce of gold. At the peak, we were at 126 ounces of silver to buy 1 ounce of gold. That's how cheap silver is. And now you're beginning to see the price of silver rally relative to the price of gold, and the opportunity of probably a lifetime beginning to... What did I do here? Fade away. I screwed up this chart. I don't know what I did here. Desmond, what did you do? All right, anyway, you get my drift. It's coming off here. Only when I'm live. Okay. Doing live stuff in front of people, I mean, it really gives you a sense of humility. All right, comments. Does quad witching throw volume and volatility through the roof? Yeah, I got to be honest with you. I don't pay all that much attention to it. Futures falling again. Looks like Lulu is trading. No, I could have sworn I saw that moving. Nope, not yet. Um, given the move higher here, it's no shock that we're going to get a pullback at some point in time. I think we're okay here. These are the small caps. Keep in mind what's happening here. You need to go down to your shorter time frames, your 15-minute. We became a little bit overbought relative to the third standard deviation Bollinger Band. We're pulling back. All you need to concern yourself is this: are we pulling back and putting in higher lows? And are we holding these gains? And at current, we're digesting them okay. You have to expect these pullbacks. And this is why I don't want to chase these rallies. Now, my guess is that these algos need, if the game plan is to sell this market off, to take advantage of the small investor and their FOMO, fear of missing out, chasing the market up higher. And believe me, they are playing on that emotion. If that's the game plan of the algos, they're gonna want to take advantage of the liquidity that is not available to them in the pre-market. They will open this market up stronger, and they'll take advantage of the small investor chasing the market up higher, providing liquidity, and then they'll dump. I don't think it'll happen in the pre-market. They'll keep the rally going if, in fact, that is their game that they plan on playing here. Checking back in with the silver trade. We've pulled back a little bit, giving up that support level. Still a good morning, up about 6.5%. And really what matters again, folks, is the dollar. And here's why we're pulling back. Keep an eye on the dollar. The dollar's rallying. Keep an eye on the US dollar. And with that, folks, I'm going to say everybody have a very, very profitable trading day. Have a great weekend. Everybody earned it. If you could hit that like button and the subscribe button, I'd really appreciate it. And I will talk to you over the weekend. Be well.